Good morning, everybody. It's Tuesday, November 12th, 5:25 a.m. Central Time. Grain markets are mixed this morning. December corn futures up 2.25 at 432.25. January soybeans down 6.75 at 1015.5. December Chicago wheat up a half cent at 566. December Kansas City wheat down 2 at 557.5. December spring wheat down a half cent at 591.5. In today's show, we've got some news on South American production, planting pace, some issues regarding drought with the U.S. cattle herd, the rally in the U.S. dollar, and also the big rally in the Bitcoin market. Let's start off with Brazil's planting pace.
So, according to well-followed private group AgRural, as of last Thursday, Brazilian farmers had planted 67% of the total expected soybean area, up from 54% the prior week. During the same week last year, 61% of the crop had been planted. Planting and crop development are proceeding smoothly across the majority of Brazil, with only a few areas dealing with a lack or excess rainfall. AgRural also reported that 72% of the expected first corn crop had been planted as of last Thursday, up from 59% the previous week, but below last season's 76%.
Brazil started off dry and planting was slow to begin, and the rains returned as they normally do, and the planting pace has caught up. They appear to be in very good shape, and all the potential in the world is there for a record crop. There's more rain coming. This is the next 10 days on my screen here. It looks pretty healthy in terms of rainfall. If you're to look at rainfall versus normal, most areas will see normal-ish type rainfall. A couple areas might be a little bit drier than normal. I don't think anybody's overly concerned, though. Let's jump to Argentina, and then we'll do some more big picture South American stuff.
So, according to the Rosario Grain Exchange, weekend rainfalls across Argentina will help farmers maintain a rapid planting pace. Hot and dry weather is forecast in the coming days, which will allow farmers to get back into the fields. Argentine farmers are expected to plant 43.7 million soybean acres this season. Over the last week, roughly 2.1 million acres have been planted. According to the Buenos Aires Grain Exchange, 8% of this season's expected soybean area has been planted so far.
So they've caught some rains in Argentina, and that has allowed them to plant at a fairly rapid pace. The forecast doesn't look great. Some of your soybean areas are going to be wet and some will not, but there doesn't appear to be any concern right now. I guess the question that I would ask myself is this: can the soybean market rally and rally substantially without a South American weather issue? Because we don't have one right now. We could have one. We've got 2 or 3 months to trade Brazilian weather here. And just for the moment, we don't have a threat. The January soybean contract went up to 1044 on Friday following the USDA report. We kind of tested out that level yesterday, and then we backed off. So for the moment, the market is not interested in making new highs. I suppose this could look different later today. We hope that it does. Brazil and Argentina combined are 52% of global soybean production. That's the estimate. And if these numbers are realized, 169 for Brazil, 51 million for Argentina, it's going to be tough for the soybean market to sustain any sort of upside. I mean, if you're looking for, $12, $13 beans on the board, it's going to be really tough to do without a Brazilian weather issue. The ending stocks to use ratio situation, we had this yesterday, I'll show it to you again today, is going to be the second most bearish on record if USDA is remotely accurate with their projections. So, the South American thing, what it does for the United States is it really limits what we can do on the export front. And for the moment, we just don't have enough crush capacity to offset what we're losing in exports. And that's why the balance sheets have been so burdensome and look so burdensome. Make no mistake, we're expanding crush capacity. It's just, it can only happen so fast. And even with Trump coming to the White House in January and maybe some better things on tap for, say, soybean oil usage for renewable diesel, I mean, you've still got limited crush capacity, and you can only crush so many soybeans. And if Brazil is as big as advertised, the export piece is capped. It's just capped. So it's for that reason that maybe I think if you're going to rally beans in the next 3 months, it's going to be a South American weather issue. If there's even a perception just for a couple of days that the Brazilian crop's not going to be there, you'll get speculators come in and cover shorts and buy the market, even just for a minute. You'll see a crop scare event like you might see here in June or July with the U.S. crop. But for the moment, it just looks like they're in darn good shape.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's premium video?
Paul Need for the Farm CPA was on yesterday. Taxes, Trump, and farmers. There's a lot of tax changes that are probable when Trump gets into office, especially now that he's got all of Congress, majority, basically. The House was called yesterday. So what's going to happen with regard to tax cuts? There's also some deduction and write-off type things that I think farmers should be interested in, some corporate structure type things that I think you guys might be interested in. Paul also gave his opinion and take on some of the Trump appointments, potentially the ag secretary in particular, and what those things might mean. In today's premium video, I'm going to talk about the funds and the corn market. So we just had this big short covering event. What happens historically when the funds cover a big short and then get about flat or marginally long? Like, is that a marketing opportunity? Is it not? What happens after that? That's what I'm going to do today. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. You can cancel it anytime. No other fee, no other obligation. Nobody tries to sell you anything else. You'll get our morning email at 5 a.m. Central Time. That email includes tons of charts, graphics, all of our morning commentary. All of my cash grain marketing recommendations are included every single business day. Super easy to sign up on your phone. You can do Apple Pay, Google Pay, Cash App, credit card. Takes like 30 seconds. Sign up this morning. I'll forward you a copy of this morning's email. Check that deal out, guys.
Dry conditions continue to inhibit the expansion of the U.S. cattle herd. It was anticipated that producers would begin to rebuild the herd this year due to plentiful moisture that we had back in the spring. However, the reemergence of drought across much of cattle country has kept producers from holding back bred females. As of last Tuesday, more than 50% of cattle in the U.S. were located in areas experiencing drought. Limited cattle supplies are straining packer margins and driving beef prices to historic highs. In addition to drought, market volatility is preventing many producers from growing their herds.
So the drought situation we saw this with like the U.S. corn areas. That drought just spiked here over the last several weeks. So 62, is that number right? 62% of U.S. cattle country experiencing drought as of last Thursday?
Last Thursday, I believe, was 54.
Oh, maybe I've got a bad data set here. But in any case, it's it's spiked. The cattle chart still looks good to me. I mean, is this a bullish situation even at these prices?
I think so, most definitely. I do think that herd expansion, even if we do get substantial rain through the winter or snow through the winter, I think it's a long ways off. As I mentioned, market volatility is holding a lot of folks back. And we all know that the downside to this side of to what's going on in the market, what we saw 10 years ago, it dropped off like a rock, and profitability will just fall out of bed. So a lot of folks just aren't biting at the bit to expand their herd at this moment.
Yeah, I get that. And this chart, if you guys are watching on YouTube, the weekly chart is pretty incredible how orderly of an uptrend this has been for the better part of 4 years now. It's pretty incredible. That doesn't mean you should avoid your risk management. LRP is a great option that we discuss at length with our subscribers. So pay attention, guys.
Donald Trump's presidential victory continues to drive the dollar higher. On Monday, the Bloomberg Dollar Spot Index increased by as much as 0.7%, reaching its highest level since November 2023. The surge was due to expectations that Trump's trade policies would strengthen the dollar and suppress foreign currencies. The Federal Reserve's quarter-point rate cut last week also boosted the dollar. The yen lost nearly 0.7% against the dollar on Monday, and the euro fell 0.6%. Experts believe the dollar could continue to climb as the market is more aware of the risks associated with tariffs.
So the dollar had been rallying even before Trump was elected, and we've seen further strength since then. Maybe you could argue that we've got this wedge pattern on the weekly chart, and maybe we've just barely broken out above the top end of that wedge. I think a trade above that high from late 2023, like 107.38 or 107.34 in the dollar index would be friendly. I'll tell you what, I think people are interested in the dollar and its relationship to commodities. And the Bloomberg Commodity Index has been soft-ish since the election, but it's not fallen out of bed by any means. And I'll tell you what, historically or normally, you have this inverse correlation between the dollar and commodities. If the dollar's strong, commodities are weak, and vice versa. But I don't see the relationship right now, and I haven't seen it for a while. You look back at late 2021 and 2022, the dollar and commodities rallied together simultaneously because it was kind of like an inflation trade type thing. The Fed was hiking rates, so the dollar rallied, but also traders were worried about inflation, so they were buying commodities. I just feel like that relationship is broken. I don't know that we're trading currency action in the commodity markets. I feel like commodities could rally even with a strong dollar is what I feel like. And I may be wrong about that, but the last few years have since COVID, things have been messy.
So Bitcoin traders are betting the cryptocurrency will reach $100,000 by year's end. The wager comes as Bitcoin set a new record high on Monday, surpassing 88,000. Bitcoin has surged in the previous week as a result of Donald Trump's presidential victory. CME futures trading for Bitcoin has risen substantially since the election, with open interest increasing by 12%. During his campaign, Trump said he plans to establish a Bitcoin stockpile. However, there are concerns that Trump may not focus on cryptocurrencies as much as anticipated once he does take office.
Yeah, nobody knows exactly what he's going to do. Don't blink or you'll miss the next $1,000 move in Bitcoin. I made this chart this morning and it was at 88,000. And then I looked up and it was at 86. And now it's back to like 87 and a half. The volatility is incredible. So Bitcoin's up 26% just this month, and it's only the 12th. It's up 107% year to date. This is the news that the Bitcoin people are talking about. So if they're taking several steps forward here, but if the United States is going to establish some sort of strategic Bitcoin reserve, which looks like a possibility. I wouldn't say it's a probability. I'd say it's a possibility. It's not going to happen until, after Trump is inaugurated and probably long after that, which is January. So the idea or the rumors floating around is that some other nation, state, or states is accumulating Bitcoin ahead of the U.S. Stockpile. Could it be Russia? Could it be China? Could it be Brazil? Could it be Saudi Arabia? Could it be Venezuela? Nobody knows. Nobody knows this is even what's happening. But the order flow and the people who follow this very closely, they don't think this is retail money coming in and bidding this thing up like this. They think this is like a whale, like some sort of nation state that has the ability to move things in this sort of fashion. So things change quickly, and this is pretty incredible. That being said, I will say that it feels like interest has picked up a little bit, and maybe people are too bullish for their own good right now, but it looks awfully strong. What did cattle do yesterday?
After opening lower, cattle futures were able to rebound and end the day higher. Live cattle were 7 cents to $1 higher. Feeders were 67 cents to $1.10 higher. Box beef was also higher. Choice ended the day at 308.21. That was up 28 cents. And select ended the day at 281.84. That was up 265.
Outside market's fairly quiet this morning. U.S. dollar's up a little bit. Stock market just off, marginally. Bonds are a little bit lower. Gold's down $15. Crude oil is up 65 cents, and the December WTI at 68.69. Have a great day, guys. We'll be back on Wednesday